So back when I was flipping houses, I had three problems. I couldn't really scale. I mean, we flipped about a dozen houses a year, which is a lot, and just the idea of 10xing that was impossible. And it wasn't really passive. It's really not what Robert Kiyosaki talks about in his book Rich Dad Poor Dad. It was a little bit more like a full-time job, and that was frustrating. It was also a little bit risky and unpredictable. A lot of times you overestimated the ARV or the construction went bad. I also didn't like the way that housing behaved in 2008, so I was a little, always had one eye open about that whole flipping strategy. And I had those problems over, 20 years ago. Today I own $300 million worth of real estate, make passive income, and I'm financially free, making true passive income. And I did it all without flipping more houses or buying more rentals. So in this video, I'm going to share with you how I did it. Hey, my name is Michael Blank, and I help people become financially free with real estate. So single family house, the first thing I had was, it was a matter of scalability. Okay, the numbers just weren't that big enough and I couldn't scale it fast enough. So if you're doing flips, for example, most people can't handle more than one flip at a time. Let's say each flip you can make $50,000. That's two a year. I can make $100,000, which is pretty cool. But what if I want to scale it? What if I want to 10x it and I want to make $1 million a year? Very difficult because if you're not buying houses, fixing them, selling them, then you're not making money. And so really making $1 million a year is going to be a full struggle. The second thing I had was, how do I make this more passive? The only way I could scale it is by greatly introducing the complexity of it. So it really wasn't very scalable. Now, rentals, it comes to mind. So, okay, Michael, why not flip stuff? And I thought about it. I flipped 3 dozen houses and then started scratching my head going, my gosh, where is all this going? I was like, well, what if I do rentals? Okay, now rentals, if I can make each rental's cash flow, let's say $200 a month, and I wanted $10,000 per month, I would need 50 houses, right? And so it took me 3 years to flip 3 dozen houses. It would take me 5 years to buy and hold 50 houses. That's 50 transactions, which is a lot. That's 2 a month. And now you have to somehow finance everything, and then you have to manage the whole thing, and the whole thing seemed overwhelming to me. And the problem with these rentals is that it just doesn't make enough money, just from an absolute term. In order to make the money I wanted, 10,000, which isn't a lot, okay, I just needed a huge amount of scale with a huge amount of work. So this whole single family house investing thing really doesn't seem scalable to me. And I was just really frustrated by all that because I felt like real estate investing was broken somehow. And then, 2008 rolls around and I saw people just lose entire portfolios. They've spent 5 years amassing these amazing portfolios, and then within a blink of an eye, they lose the whole thing. I was like, how can this be? How can I spend 5-7 years building a portfolio and then within one recession, I lose the whole lot and it ends up in bankruptcy? And so to me, above all, the thing that's not very scalable and I can't do passively, I didn't love the risk. And really what one is looking for is something where the numbers are bigger, but I can scale without working more, and something that's going to be around for a while. And so this is really where I got into multifamily a bit by accident in 2011, is where I got into a 12-unit in Washington, D.C. through one of my wholesalers I was buying the flips from. And I had taken a commercial real estate investing class back in 2006. Super cool. Even developed an analysis spreadsheet that's now known as a syndicated deal analyzer, or SDA, the most widely used tool on the planet for syndications of any kind of real estate. And so I knew about apartments, but apparently not enough to not flip houses. I still thought that was the best way to do it at the time. So anyway, so I got into this 12 unit, and it was a nightmare. I'll save that for another day. I had a professional tenant in there, and it was a nightmare for about 18 months until it finally stabilized, quieted down, and then it was sending me $1,500 a month in mailbox money. And that's kind of when the light bulb kind of went off in my head. I'm like, oh my gosh, first of all, I can pick up 12 units right away. And I don't have to pick up 12 individuals. So that was really, really cool, where I could just, with one deal, I can pick up a whole bunch of units. And then the other thing also was not only the numbers bigger, but also I could take that building and give it to a professional property manager. And you're not likely to do that with a rental portfolio. Typically, you self-manage your houses, or you give it to some, part-time realtor who then manages with very mixed results. But with multifamily, because they're bigger, typically there are professional multifamily property management companies that you can give this deal to. And so now what you can do is you can do a single transaction of 12, 15, 20, 25, 50 units, single transaction, and now I can give it to a property manager. Okay, then I can take a little bit of break, take a vacation, and I can do it again and again and again. And therefore, as I build up my portfolio, my workload doesn't really get a lot heavier. And so this means it's scalable and more passive because the numbers are better, they're more interesting, and I can scale without working a lot more. And the other thing about multifamily is it's a lot less risky. If we look at 2008, where 4% of the houses went into foreclosure, only 0.4 went into foreclosure with multifamily. That is because you have multiple tenants in a building, meaning that your break even is lower. If a break even with a house is, well, it's either you have a tenant in there or you don't, right? If you don't, then you're not making any money at all. With multifamily, you have 1 or 2 or 3 or 4 not paying or empty, you're still making money. In fact, you'd have to be about 35% empty in order to break even. A lot of things would have to go very wrong, and it's not very normal to have that kind of distress. It happens sometimes if your property manager is really not good at their job. But if it starts dipping below 80%, you can then quickly pivot and put another property manager in place to prevent 65% occupancy. That's awful. So because you have multiple tenants, what happened in recession? Even though people weren't going bangbuster with multifamily either, they just rode it out and they just waited till the recession was over, and you didn't have that luxury with single family houses. So multifamily from that perspective is also less risky. And this is really what I like about this strategy, is that it is more scalable, it is more passive and less risky than really any other real estate strategy out there right now. Right now, the market is giving you a massive opportunity to invest smart. So just like me, you can maybe spare yourself from 3 dozen flips or 3 dozen rentals and just go right into multifamily, right? So if you have some experience in real estate, fantastic. It can't hurt, but you don't need it, right? The only thing you need really is that you want to scale with real estate. Like if you understand that scaling with single family houses is going to take too long and you don't want to wait 10 years or 15 years to do it, and you want to scale faster, then look into apartments. In fact, I put together a training course called Apartments 101. And for that same exact reason, because it kind of walks you through the fundamentals of apartments, talks about what a syndication is, how to raise money, how to find deals. So to enroll in that course, just find a link below or in the description of wherever this video is, and just enroll in that video. And I think it's going to open up your mind to what it's really like to scale with real estate. Catch you next time.